Welcome to the channel. It's AlmightyDen, and I'm back again, and I'm here to help y'all get this bread. Now, I want y'all to know that today there is a dip in the crypto market going on, and I want y'all to be able to take advantage of it, but at the same time, not get hurt by it. You see? Now, understand that volatility in the crypto market is to be expected. Dips are to be expected. Pullbacks are to be expected. But it's two things you don't want to do in the crypto game. You don't want to buy peaks, and you don't want to buy falling knives, which means you don't want to buy it when it's at all-time highs, and you don't want to buy it while it still has a long way to go down. But with that being said, a lot of the time for a lot of traders and a lot of people who invest, they have limit orders set at certain places, which means when it drops to a certain amount, an order will automatically execute for them because they know that there's good support at that level to buy those cryptocurrencies. But understand that a lot of time as well, that even though sometimes people have their limit orders so close to the support line that it may not actually hit that line and it feel, but it may get close. It may get close. So in those types of periods for me, for my own experience and my own sanity, instead of maybe not hitting the support that I wanted to hit, sometimes I'll go ahead and buy a little bit, not as much. I won't go in super heavy, but I'll buy a little some during the dip, even though it hasn't hit my level all the way. And then if it hits the level that I wanted to hit, then I'll be at more and more comfortably. You see what I'm saying? It's all about being smart about it. Now, today I'm gonna show y'all this coinmarketcap.com. But first things first, if y'all haven't already, hit that like button to help this video out in the YouTube algorithm. Subscribe to the channel if you're new. Cut those notifications on, because I'm gonna help y'all get to this bread. And, I'm gonna spread this knowledge. I'm gonna share this with y'all because I want y'all to do well. If I'm doing well, y'all doing well. If y'all doing well, then I'm doing better. So that's how it's gonna go. Now we can see that a lot of these places in the crypto market are red right now, because when Bitcoin goes down, a lot of the altcoins, a lot of the meme coins, pretty much everything follows Bitcoin. Bitcoin is the leader. Today we dropped under 60,000. Now I would like to see this whole 60,000, because if it doesn't, that could open up the path to more downside, more selling side. But understand it's okay, because it needed to correct a little bit for the short term. We had a massive run up to about 68,000. So a bit of a correction isn't nothing. Keep in mind that when in doubt, zoom out. Zoom all the way out, man. This year we hit about 30,000. We ran all the way back up to 68,000, nearly 70,000, and we're still looking forward to getting to 100,000. And this is the first pullback we've had on this run, so that's not a bad thing to see it at 60,000 again. That's giving people another opportunity to get in at a cheaper price. Now, how can you make your crypto plays free, might you ask? Because you can at a certain point, but it's important that you get in early and on dips and not rips to take advantage. Now, obviously, Bitcoin is at a much higher price, so we're gonna go to our meme coins that I know a lot of y'all are interested in: Shiba INU, Dogecoin, ELON, and Saitama. Let's start off with Shiba. So Shiba, right, at the highs, it was at about 0.000088 cents, and right now it's at 0.000048. Now that's a heavy discount. Now, like I said, my support line was drawn down here at about 0.003637 range. So that's really what I would want to buy and go heavy at. But I would not mind adding in a little bit right here, because we've seen some buyers step in at these levels right here to get some support. So I would not mind that, but also I would not be surprised if it goes lower. So for my own sake, I wouldn't mind adding a little smaller position here, and then if it goes down further, add a bigger position, because the plan is to keep getting more and more anyways. You see what I'm saying? That way, if it does happen to bounce right here, I got in. And if it doesn't, then I'm still ready for it to go down. So it's always best to be prepared for both case scenarios. So ask yourself, how can you make the play free? Now, right, if the crypto goes up 100, 200, 300, 400, 500%, if you want to make the play free, all you'd have to do was take out your initial investment that you put in after it hits either 100%, which means if it hits 100%, you take out half of the play. If it hits 200%, you take out about half of that, which would be like about a third. If it hits 300%, you take out even less. It just depends on the higher that it goes up. So pretty much out of the momentum up, when it starts to show that it wants to pull back some or maybe have a dip, that's when you pull out and make the play free, and you can let the rest of it ride if you want to. Now, if you want to let everything ride, that's on you. But you can make these crypto plays free. I know a lot of people do that in the crypto market, in the stock market. Making the plays free takes out a lot of risk. But understand, once you get to a certain point in the meme coins, it is important that you do understand that you should take profit at some point, especially in these meme coins, because these do go up and come down really hard. They're not like Bitcoin and Ethereum, which have long-term use cases, which are like I think they're all investments. I'm not going to say that meme coins aren't investments, but I do feel like Bitcoin and Ethereum and cryptos with actual use cases are safer long term. They're safer long term plays. While in the meantime, meme coins can go higher in the short term. So that's how I see that. So it's always be good to take advantage of those. Now, if we look at Dogecoin, like I said, I do feel like I'm gonna stick to this right now. I do feel like Dogecoin is at safer levels to buy right now than Shiba. You know, I feel more comfortable buying Doge at these levels than SHIB, even though I still like the dip on SHIB. But Dogecoin has had a longer period of consolidation at these levels, so it has a stronger level of support down here in this low 20 cent range. So I'm definitely happy to see that. I feel like that is a good dip buying opportunity in my opinion. I would feel comfortable loading up down there as well, but make no mistake, I'm no financial advisor, but this is how you take advantage. You want to buy dips, not rips. Would you rather buy it down here at 23 cents or up here at about 48 cents, or when it was at 70 cents before it was on Coinbase and all that? So keep that in mind. Now, ELON, Dogelon Mars. I still think this one is kind of high. You know, not necessarily price wise, but based on the chart, I do feel like it has a little bit more room to come down. I would feel more comfortable buying it if it was closer down to that 0.0000000, all those 0.7 range instead of the 15 it's at right now. That's about half, right? So if it were to drop down here, that would be 50% off from the current prices that it's at right now, and that would be way cheaper than it was when it was at like 0.0000027. So that is a premium dip buy right there if it hits those levels. But right now, there's a lot more risk involved compared to Doge and compared to the SHIB, where I could see it dropping. Now, I'm not saying that SHIB can't hit this level and go lower, because that is possible. But I'm just saying this is somewhere some of its best support is right now, which I feel comfortable at. And that Dogecoin itself, it's already had a long period of consolidation. So I feel much more comfortable with Dogecoin than Shiba than I would Elon at this particular point in time. Now we can go to Saitama as well. I know this one is very popular. This one has had a very, very strong pullback if we're looking at the chart right here. But you know, this is also another interesting meme coin. Based on this chart right here that we have, I definitely would feel more comfortable buying it down here on the 15th than I would on the 12th when it was super, super high. This is a massive, massive discount. It has some consolidation down here, so I wouldn't be too mad about that. I feel like that would be a good opportunity if you're interested in Saitama, but understand that there are a lot of meme coins. I know that you don't want to miss out, but I will say that I believe Dogecoin is still the king of the meme coins. You know, still got Tesla, Elon Musk backing it. Still has a very big fan base. It has been cooling out for a while. Consolidation is there. I mean, the stars are aligning for it to get in and average in at these levels, which is a much safer play. But at the same time, I understand that y'all want to be early on some of these other plays. But this one also still has about a $3.5 billion market cap. So it's not exactly, I mean, it's still much cheaper. The market cap is much lower than SHIB and Doge, but it's still not as early as I would like it to be. You know what I'm saying? It would 10x if it reached about the Doge and SHIB market cap, which would be absolutely cool, but understand that that's where we're at with that. Now, Bitcoin, Ethereum, we see these pulling back as well. That could be a good chance to see. We want to see people step in and hold Bitcoin about 60,000 and Ethereum at 40,000. Ethereum hit about 4,100 today as a low, but it bounced at 40. Now it's at 42. But the trend is still here to play out. We still have to see this thing through, see what it wants to go over these next coming days. But the dip is there. There is a dip buying opportunities presenting themselves in various coins today. You know what I'm saying? It's not just these meme coins. It's not just Bitcoin and Ethereum. It's pretty much everything. I do like Cardano. Cardano is a very, very good dip buying opportunity in my point. 88 at $1.88. I think that's a premium. I think that's a really good dip buy. I'm not gonna lie to you. I mean, look at the chart. You know what I'm saying? Like, look at the chart. It came down a lot. This thing is hit about 170 and it's broke its level of consolidation. So, and if buyers are stepping in, I would definitely feel okay buying some here. I'm not saying that it couldn't go lower, because it could, but just based on the recent price action, $1.87 versus the $3 that it was at, I mean, that's a pretty good price range. And even here, if you had a level of support drawn right here, based on this right here, that is a very good dip buying opportunity in my opinion. I'm no financial advisor. I'm just letting y'all know what I see, what I like. But the crypto market is getting lit up right now. So with that being said, invest at your own risk. Don't invest more than you can afford to lose. If you like this video, hit that like button, subscribe to the channel if you're new, turn off notifications on, because I will be back for y'all. But anyways, until next time, Disky out.